Hello and a warm welcome from my side. Let me give you a brief summary of our Q3 results as well as the most recent company highlights. We had a very strong quarter despite the difficult economic environment. We had a strong improvement in EBITDA. It jumped from 35 million to 59 million. That's an increase of 70%. We also had a solid revenue growth of 45%, which was obviously driven by the Kartech acquisition announced in the first quarter of this year. But Kontron also grew organically by 6.2% in the third quarter. The profitability, the net income, grew significantly to 24.4 million, despite one-off effects due to the Kartech integration. And we had a very strong order intake in Q3. The book-to-bill ratio amounts to 1.21, implying a growth in the third quarter of over 20% of our orders. The backlog now amounts to over 2 billion. That's more than 1 year of revenues at Kontron. We saw strong improvement of the gross margin. There was a leap forward to 44.7% for the first time. Let me remind you that the gross margin amounted to 38% last year and 42.5% in the second quarter. That's due to new products which were launched end of last year, and we started to get some track on the market in the first half of this year. That's amongst others Kontron OS, the new operating system of Kontron, and Kontron Grid, connecting up to 1 million edge devices on servers in one grid. All those new contract products are NIS2 compatible, so meeting the new EU standard for software in critical infrastructure. And we're very happy and see that these developments will continue in the coming quarters. We have to mention that the integration of Kartech is almost complete. It will be completed most likely by the end of the year. And last but not least, there was a small share buyback program, which was also completed in the third quarter of 10 million euros in total. Let's have a look at the result for the first 9 months. Revenues increased by 45% to 1.2 billion. If we compare those 1.2 billion to the new orders we got into our books of 1.4 billion, we get to book-to-bill of 1.19, implying a growth of 19% of our books compared to our revenues. The gross profit jumped by 52% to 519 million, and the EBITDA jumped by 48% to 141 million. That's the first time we have more than 100 million of EBITDA already after 3 quarters. The earnings per share increased by 17%. All in all, a net profit of 62 million. It's the first time with €1 of profit already after 3 quarters. On the operating cash flow, the reported operating cash flow amounted to 3 million, but you have to bear in mind that we've reduced factoring significantly over the first 3 quarters. If you adjust the operating cash flow for the reduced factoring as well as the year-end turn effect, you would get to an adjusted operating cash flow of 70 million. That's an increase of more than 100% compared to the previous quarters. Let's finally have a look at the design win pipeline as well as the backlog development. The design win stood at over 4 billion at the end of last year. Design win pipeline has increased by over 2 billion to over 6 billion at the end of the third quarter. The backlog stood at 1.7 billion at the end of last year. It has increased by over 300 million, thereof 90 million in the third quarter alone. This increase was driven by 3 developments. First, new orders in the wallbox segment for EVs. Secondly, aerospace, a new order for satellite communication systems. And thirdly, by the train systems. Train sector, there was a design win of over 30 million for GSM-R, which is the communication system for rail in the Czech Republic. Thanks for your interest in Kontron. If you have any questions, please send an email to ir@kontron.com. We're looking forward to discussing further with you. Goodbye.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.